What do Warren Buffett and millions of everyday investors have in common right now? They're both smiling thanks to UnitedHealth's latest announcement, and the stock market is taking notice. If you've been following healthcare stocks or the broader market, you know it's not every day a company calms Wall Street's nerves with a simple message. Business is fine, but that's exactly what UnitedHealth just did, and the ripple effects are significant. Let's break down what happened and why it matters. UnitedHealth Group, which is the largest health insurance company in the United States, just reassured investors that, despite some recent concerns, its business remains strong. Now, this might sound routine, but in the world of big money and high stakes, confidence like this is gold. In fact, UnitedHealth's stock price surged after the announcement, and that's particularly good news if your name is Warren Buffett. You see, Buffett's Berkshire Hathaway recently bought a huge stake, about 5 million shares, in UnitedHealth. When a legendary investor like Buffett makes a move like that, the market pays attention. But even Buffett doesn't like surprises or bad news, especially when it comes to companies he's betting on. So UnitedHealth's upbeat message didn't just stabilize the stock, it gave a boost to one of the world's most watched investment portfolios. Let's look at the backdrop. Over the past few months, health insurers have faced several challenges. There were worries about rising costs, especially as more Americans returned to hospitals and clinics for surgeries and treatments that were delayed during the pandemic. If more people use their insurance for expensive procedures, that can hurt profits for companies like UnitedHealth. On top of that, there's been chatter in Washington about potential changes to how Medicare and Medicaid are funded, always a wild card for insurers. But UnitedHealth's leadership addressed these concerns head on. They basically said, yes, medical costs are up a bit, and yes, there are always risks in this business. But overall, the company's revenue, their ability to manage expenses, and their outlook for the rest of the year all remain solid. In other words, they're not sweating it. Investors love that message. UnitedHealth shares shot up, adding billions of dollars in market value almost overnight. And for Warren Buffett, those 5 million shares became a lot more valuable. To put it in perspective, UnitedHealth is a behemoth. It insures tens of millions of Americans and has a market cap north of $400 billion. So, when its stock price moves, the impact is massive. Now, why did Berkshire Hathaway buy into UnitedHealth in the first place? If you look at Buffett's investment style, he's always favored companies with wide moats, meaning businesses that are hard to disrupt. UnitedHealth fits the bill. Not only does it have a dominant market position, but it's also diversified. Besides insurance, it owns Optum, a huge health services arm that deals in pharmacy benefits, data analytics, and even direct patient care. This kind of diversification helps the company weather storms in any one part of the healthcare system. Historically, healthcare has been a relatively safe bet, especially as the U.S. population ages. More seniors mean more demand for insurance, prescription drugs, and medical services. UnitedHealth, with its deep reach into both insurance and health services, is arguably better positioned than almost anyone to capitalize on these trends. But even giants aren't immune to shocks. Earlier this year, the entire health insurance sector took a hit when some companies warned that higher-than-expected claims could squeeze profits. Investors started worrying that the sector, which had delivered steady returns for years, might finally be hitting some turbulence. That's why UnitedHealth's reassurance is such a big deal. It's a signal that at least one major player isn't seeing the sky fall. UnitedHealth's strong performance also tells us something bigger about the U.S. healthcare system. Despite constant debates about costs, reform, and access, the business side of healthcare remains incredibly resilient. Companies like UnitedHealth have become experts at managing risk, negotiating prices, and finding efficiencies. That's not to say there's no risk. Regulatory changes, new competitors, or major shifts in medical costs could always shake things up. But for now, the fundamentals look solid and investors are responding. It's worth noting that Warren Buffett's interest in healthcare isn't new. For years, he's talked about the sector as one of the biggest forces shaping the American economy. Healthcare spending in the U.S. is over $4 trillion a year, and it's only growing. Companies that can control costs and deliver services efficiently are likely to play an even bigger role in the future. That's part of why Buffett and Berkshire Hathaway have poured money into not just UnitedHealth, but other healthcare giants as well. So, what does all this mean if you're an everyday investor? Well, it's a reminder that sometimes the simplest message, like business is fine, can have an outsized impact, especially when uncertainty is in the air. It's also a testament to the value of sticking with companies that have strong fundamentals, even when headlines get scary. Looking ahead, the health insurance sector will keep facing challenges. Costs may rise, regulations may shift, and competition will only get fiercer as technology changes how care is delivered. But for now, UnitedHealth's steady hand is reassuring investors, and Warren Buffett's bet is looking pretty smart. As we move deeper into a world where healthcare is both a necessity and a business, it'll be fascinating to watch how companies like UnitedHealth adapt, and whether more investors start following Buffett's lead. After all, in the markets, confidence can be contagious, and sometimes a little reassurance is all it takes to turn a moment of worry into a wave of optimism.